Good morning, everybody. Today's Tuesday, June 16th, and I am joined today by our wonderful Jackie Durham. She's our attorney with a magnifying glass. I think that's going to be your nickname now, Jackie.
I think so.
Jackie has been instrumental in reading all of these provisions in quite a bit of detail. And you know, guys, my favorite saying is the devil is in the details. So we have just continue bringing all the updates to you. There's a couple of things we wanted to cover today. We really didn't have much of a slide. There's really nothing that's dramatically new in terms of rule changes, but we wanted to refresh a little bit on what we discussed last week, which was the new law on changes in the PPP loan program. And also we wanted to touch on the EIDL loan, which many of you have probably read the news that EIDL is back on for being available to some taxpayers. So I think what we will do, and also please send your questions. We will be monitoring questions. I will let Jackie start with a couple of clarification points on the PPP loan update rules.
Okay, so first I want to start by saying that the deadline for applying for the PPP loan is still June 30th. So if you haven't applied for one yet and you're interested in doing so, I would move on that quickly, because the new Flexibility Act nor the regulations have extended that deadline. Also just want to clarify that there were regulations issued last week, which were basically modifying prior regulations to make them consistent with the terms of the new Flexibility Act. But they did take it one step further in some instances and basically provide for rules and waivers of really what we thought were part of the Flexibility Act and restrictions imposed by the Flexibility Act, which I'm going to get to that 60% cliff, which we touched on last week. So I'm going to kind of just go through my list of things that the regulations reaffirmed and some clarifying points. And then, of course, like Marina said, just send in your questions as you have them. And if we haven't addressed them, we'll certainly answer them to the best of our ability. So first, just want to reiterate the fact that the loans that were made prior to the new Flexibility Act on June 5th are going to be subject to that 2-year maturity. You don't get to enjoy that 5-year maturity, unfortunately. That's only for loans that are issued after June 5th. This is probably due to the fact that it would be somewhat of an administrative nightmare for the lenders who have already issued the loans. They already have the promissory notes and all documents indicating that 2-year maturity date. So they probably got some pushback on offering that to pre-existing loans. Something else I want to mention is the deferment period. We talked about this last week. The deferment of payments due under the PPP loan are going to be deferred until either the SBA issues and approves the loan forgiveness to your PPP lender, or a period that is 10 months after the expiration of your 8-week or 24-week covered period. So there's nothing specifically in the Act or in the regulations that establishes any bright line rule for a deadline for filing your application for forgiveness. However, a lot of practitioners are pointing to this 10-month deadline for deferment and basically saying, this is SBA's way of saying, you know, file your application or you're going to basically waive your right to do so. I have yet to see anything that specifically says that if you file your forgiveness application 10 months and 5 days later that it's going to be automatically rejected. But this is indicating sort of the intention behind SBA in terms of what they expect from borrowers who want to get that forgiveness.
Yeah, and there has not been anything from the banks either. In fact, there was a letter circulating from Chase Bank yesterday that I was forwarded, and I was reading that, and it said the same thing. It was kind of a general letter to all the PPP borrowers that said, we're not ready, we're working on the application. The application still has to be updated, and so the banks definitely will be adjusting their system. So there has not been anything from the banks as to when they're ready to start accepting those.
Right. Another clarifying point I just want to make, there is you have the date of receiving the loan proceeds, which starts to toll that covered period, the 8-week or the 24-week covered period, depending on what you elect and depending on when you got your loan, because of course that will dictate whether or not you can elect an 8-week period. But the date that the SBA assigns a loan number is the date that's going to determine whether or not you qualify for the 2-year maturity or the 5-year maturity. And that's different from the date that you actually receive your loan proceeds. So that is something I wanted to kind of raise my hand about and clarify, because again, it's the alphabet soup of dates and rules, and they're not all consistent. So just, you know, make sure if you're trying to determine what your loan term looks like, it's going to be based on the date that SBA actually signed the loan number to your particular loan.
Is it usually a couple of days difference then, Jackie, between your loan is assigned to when you're receiving the funds?
I'm not really sure exactly how many days that is. I know that you're going to have some kind of email or something confirming when the loan number was assigned to your loan. But I don't know if the bank has any certain number of days that they have to wait, like a grace period between when the loan number is issued and when the funds are dispersed. So
where I see this being, it may just be, even if it's, let's say, a couple of days, where I see it's impacting people with the payroll period, to say, which payroll period am I going to pick? Am I going to pick am I going to prorate the payroll period? Or am I going to pick the alternative covered payroll period? And those couple of days may make a difference, because you may still be in your old, 2-week payroll period, let's say, and you want to pick the next one, or you may still be only starting it. So that may make a difference on which payroll period you can pick for the loan.
Right. So I guess just everybody keep in mind, your covered period will start the day you get the funds in your account. And then you can decide from there, for forgiveness purposes, if you want to use that alternative covered period or the primary covered period for your payroll costs. The other thing I wanted to touch on, the loan forgiveness period is 24 weeks unless you received your loan prior to June 5th. So as long as you received your loan on or after June 5th, you're going to be stuck with that 24-week period. For some of these borrowers who have been sitting on their funds because they didn't know what to do with them because there was so much confusion surrounding these rules, this 24-week period is going to give you a lot of breathing room, which is great. But for other borrowers, you may benefit more from an 8-week period, because then you don't have to worry about keeping your employee headcount up. So I think that is a consideration to make.
That's actually a pretty big consideration. And I wanted to mention that last week I did get several emails from clients who were closely watching their headcount, full-time equivalent. Not that they're planning on firing people or anything like that, but I think the pressure when you are in that 24-week period to keep all of the people at their salary level and all the people at their full headcount, I think that may put some pressure on the business that is still not doing really well. So they may be better off using their funds for 8 weeks and really they've already put strategies in place to utilize it for payroll properly and for the other costs. So they're already in good shape. So there's no reason, if you've already done everything correctly to set yourself up for an 8-week period, that you really need to select the 24. And the other question then was leading as, well, can we pick something in between? And you cannot. It's either going to be the 8-week period or the 24-week period.
Right. Yeah, unless you got your loan on or after June 5th, then you're just stuck with that 24-week period, unfortunately.
Yep.
Now, the other item, the big item that everyone's been talking about, is that 60% cliff. The Flexibility Act, the verbiage in the act itself very clearly establishes a cliff. SBA comes in and they're like, no, that's not what we meant. They don't really have the authority to override this act, but we'll see what happens. The two rules I really want to drive home are, number one, you have to spend 60% of your total loan proceeds on payroll costs, no matter what. So whether you can spend them during the covered period or whether it takes you the covered period plus some other period of time in order to expend 60% on payroll costs, that is what you have to use those proceeds for. You're not allowed to deviate from that. However, if you're unable to spend 60% of the total loan proceeds within your covered period for whatever reason, that's not going to completely throw you out of forgiveness altogether. It's just going to reduce your forgiveness proportionally. So you have to maintain that 60-40 balance where no more than 40% of the forgiven amount can be attributable towards those non-payroll expenses. So for example, if you got a PPP loan of $150,000 and you spent $60,000 on payroll costs during your 8-week or 24-week covered period, you would be capped at a total amount of forgiveness of $100,000. $60,000 for the payroll and $40,000 for the non-payroll. So that's basically how it's working, which mirrors exactly what the old rule was, except now we have a 60-40 ratio instead of the 75-25 ratio. Let me see what else. Just a reminder, now that we have EIDL coming back into play, any EIDL grant is going to reduce your forgiveness. Also, any portion of an EIDL loan which is spent on payroll expenses is going to be required to be refinanced by that PPP loan. So just kind of keep that in mind now that we're going to have EIDL and PPP in play once again together. And I think those are the main points I wanted to touch on.
Yeah, that sounds good. Thank you, Jackie. We're getting a couple of questions on the EIDL. So maybe before that, I wanted to just maybe refresh everybody's memory on what the EIDL loan is. And Jackie, we can go back and forth a little bit in case some of the points, it's a little bit rusty because EIDL has been out of money for so long and we've been so focused on PPP. But essentially, we got an email, and I think this came last night, to say that EIDL program has money again and is open to non-agricultural taxpayers. So to refresh your memory, EIDL was kind of the first loan that was available when this disaster started, and they quickly ran out of money. And then they kind of limited their funds to agricultural, and now it's open again. A lot of people have applied for EIDL, and I don't know, Jackie, if you have been seeing from your clients, but in the last 2 weeks, I have had a lot of emails from my clients with approval of their EIDL loans that they had applied for back in March and April. They applied and were already sort of given up hope that they were going to get it anyway. And then all of a sudden, they started getting emails to say, yes, you're approved, you're approved. Now, a lot of those people already had the PPP funds, so they were not sure, what to do. But let me just, I guess, refresh your guys' memory. Generally speaking, EIDL loan is a loan. Okay, it is a 3.75% and it's 30-year term. I think there's a deferral of payments and the interest still accrues, but it's most certainly a loan. The only forgivable portion of EIDL loan is the grant that you may have received initially when you applied. That grant was limited. At the beginning, it started with just $10,000 flat. Then when they started giving those out, they quickly changed the rules to say it's $1,000 per employee. So even that grant that was given was limited to employee count. And a lot of our clients, self-employed or small businesses, they got 1,000, 5,000, but up to 10,000 if they had up to 10 employees, they got the grant and that was it. And the loan itself was still kind of in the holding pattern on being approved. So again, whatever loan you may be getting notification on now to say, yes, you've been approved for this EIDL loan, that EIDL loan is a loan. None of that EIDL loan is going to be forgiven. There's no forgiveness application, stuff like that. So just keep that in mind. We found that a lot of the clients who were reaching out to us to see what programs were available were really looking for some sort of temporary help, which is why PPP was great because of the opportunity to be forgiven. With EIDL being a loan, not everybody really wanted to have a loan, but it is still at a fairly low rate at 3.75. So I think that if you are struggling and really could use that extra money to pay the operating expenses, I think EIDL is a great opportunity. EIDL, it's a little bit different in that it doesn't have the same level of restriction on what you can use the funds for. So you can still use the funds on payroll, but you can also use the funds to pay independent contractors. You can pay your operating expenses, not just your rent and your business mortgage and the interest. You can actually use it to pay some of the business credit cards that you may have been charging stuff on the business credit card, and it's got a super high interest rate. You can pay that credit card off as well now. And just really, marketing expense, buying supplies, all of the stuff that requires for you to continue to run your business. Those are the funds that are used for. I got an email this morning from a client who got an approval of their funds, and she mentioned that in the loan approval, it said you cannot use this loan to relocate your business. Jackie, I don't know if you've come across anything like that. It seems a little bit strange. This particular client are actually in the process of moving to bigger space and renovating it. So I thought that was a little bit strange that that was a restriction on EIDL. I don't know if you've come across anything particular like that.
Well, I think maybe we can just touch on real fast, what are the permitted, there are very specific permitted uses of the EIDL funds. It's definitely more broad than PPP, but they include payroll costs during business disruptions and substantial slowdowns. So that's not just payroll costs whenever. Providing paid sick leave to employees unable to work due to the direct effect of COVID, mortgage payments, rent, increased costs to obtain materials unavailable due to an interruption in supply chains, and then repaying obligations other than those I just mentioned a second ago that cannot be met due to revenue losses, including those payments to independent contractors.
And that's a very broad category there. When you're saying repaying obligations other than those listed above that cannot be met due to revenue losses. So to me, what that says is if I've been struggling and put a lot of business expenses on my business credit card, I can now repay that card or if I had vendor invoices that I hadn't paid that may have been a little bit behind, now I can do it. But it seems like it's a catch-all category. So I was a little bit surprised with this particular client that it did put a restriction on moving. I guess maybe what it's trying to do is not to let you spend it on, increasing your building or capital improvement or expenditure. I am not so sure that if they're moving to different space and now have higher rent or have buying more equipment or buying more furniture and fixtures, that is going to be a disallowed expense. I really think it's talking more about the really the capital expenditure of moving and probably purchasing real estate property. But the issue with this loan is it's not through a bank. You have to apply through SBA directly. So I feel like at least when you're applying for PPP, you have a banker. A lot of clients said I had a hard time communicating with the bank. Once things settled down a little bit and the applications were going more smoothly, you could actually talk to your bank and at least get their interpretation of, what should I put here, or please help me with this. Here, you're applying on SBA website, directly through an SBA. There's really nobody to ask questions. And I think that the best you can do is apply and, I think it's asking you for the revenue for the past year. It's asking you for the expenses. It's a kind of also very simple and small application. But there's really nobody to give you any more guidance when you're applying as to what exactly you will be applying for. But definitely the use of funds is a lot broader. Let's talk a little bit, Jackie, about the interplay between the PPP payroll versus EIDL payroll. I think people need to be aware too of how these two correlate.
Right. Well, I want to touch on something real fast with respect to EIDL before we dive into that. I believe this loan is really intended to replace capital necessary to continue operations of the business. And the borrower, this loan carries a higher threshold of economic injury that you have to certify to as a borrower. So when you sign the application, you have to certify that you've suffered substantial economic injury. And the loan needs to be necessary to allow you to meet your ordinary obligations, whether it's accounts payable, payroll, other debt obligations. It must be necessary to help you meet those obligations. If you are able to otherwise meet those obligations on your own, you will not qualify for this loan and you should not take the loan. Now, when it comes to payroll expenses, although this allows you to use the loan for payroll expenses, I would almost, if that's the main expense that you're going to have a hard time meeting, and you might be able to otherwise meet the other expenses without this loan, I might say go for the PPP, because at least that's going to be forgiven. Now the EIDL grant, I mean, the EIDL can still supplement that. If you can always get both, and I think if you truly need both, having both will be nice to have. But just keep in mind that the payroll expenses, if you already have an EIDL loan and you want to get a PPP loan, if you've expended any portion of that EIDL loan on payroll expenses, you're going to be required to refinance it through the PPP loan. And also the payroll, I guess another interplay between the two is, if you have an EIDL loan and then get a PPP loan, remember there's that 60-40 requirement that you have to meet, where 60% of the total loan proceeds has to be spent on payroll costs. Well, the portion of the EIDL loan that gets rolled into your PPP loan will be used in calculating that percentage. So if you spend a certain amount of your EIDL loan on payroll expenses before rolling it into your PPP loan, you will get credit for that.
Absolutely. And I think that that's what the idea here was, that the SBA was supposed to communicate with each other based on an applicant. So if you're one applicant and you've applied for PPP and you've applied for EIDL, because a lot of people applied for EIDL before they applied for PPP. So if you got both loans, the concept was that SBA was going to police it in a way that if you are getting PPP funds that will be forgivable to the extent you're using them on payroll and also using the EIDL funds, you're not going to get both. This way, they were going to make sure that all the applicants were had an opportunity to get that assistance for payroll. So I think the idea is I guess this is what I've been telling my clients, is as long as you're inside your covered period for PPP and you're spending PPP money on payroll, if you also have EIDL loan, do not spend EIDL loan at that time on payroll. So make sure you have documentation that if you are spending your EIDL loan funds, that they are spent from independent contractors and your other expenses, your vendor, your supply purchases, and maybe your mortgage payments, because again, PPP only covers the interest on your mortgage and of your business building, but not the principal. You can use the EIDL on the principal. Once you're outside of the PPP covered period, then I think you can safely take the EIDL money, if you still have any left, and pay them and use them on payroll. So I think that you are safer to do that and just keep the documentation going on what funds you use to pay what, and keep the Excel spreadsheet going, or have your bookkeeper help you with making a note of it in your QuickBooks file. But I think it's definitely, as far as payroll is concerned, watch the covered period, use PPP funds inside the covered period, and then use the EIDL funds outside of the covered period. Would that be a good advice, Jackie, for people going forward? With a lot of people that are still with their PPP loans and getting approved for the EIDL loans now?
Yeah, absolutely. Absolutely. And I also have heard similar stories about applicants who applied for the loan and even got notification that they were approved for the loan like 2 months ago, but it was crickets after that. They didn't see any funds come through aside from the initial EIDL grant. So it seems like the EIDL department is starting to pick up some steam. Another interesting item that I've heard about, but I actually haven't talked to any clients about this yet, is there's supposedly some kind of limitation on the initial disbursement under the EIDL loan, and it's supposed to be equal to, and this is in addition to any EIDL grant that you get up to $10,000. The initial disbursement of the EIDL loan is only going to be, I think, 2 months worth of your operating expenses, up to a maximum of $15,000. If anybody's heard of that, I would be interested to know if that's actually being put into practice. That is something that was mentioned some time ago, before EIDL dried up for non-agricultural businesses. It was mentioned to be a stipulation of the loan program. I didn't really understand what that was about, why they wouldn't just fund the entire EIDL loan at once, but I would be interested to know if anyone else has encountered that limitation.
Yeah, I do remember hearing about that and reading about that a little bit, but in the last several weeks, my clients who have forwarded me their approval, it was all the amount that was approved, if they chose to get it, they got the entire amount. They were not limited in sort of batches, if you will, on how they were receiving it. So I definitely think that if you feel like you are going to need the funds, and you can definitely utilize it, and you want to have that backup, because there's still a lot of uncertainty. Your business is still not up to where it should be. That is not a bad loan to have. I think it's a little bit tougher than PPP in that I believe they do pull your credit, Jackie, if I think I'm correct on that. And if the loan is over a certain amount, I think it's 200,000, you do need to have a personal guarantee. So no, under 200,000, no personal guarantee, but over, yes. Also, I think that certain loans in excess of a certain amount, I think it's 25,000, may also require some collateral. So it's almost like a more of the real loan process than PPP ever was, in that, you do need to show the ability possibly for, that you can repay and that you're upstanding business. In terms of who would benefit from this the most, and we've advised that from the beginning, it's going to be those real estate related businesses that were not heavy on payroll, but really heavy on expenses. So businesses that have rental properties, that, the payroll is not their biggest expense, but all of the rental expenses relating to the rental properties, let's say they lost a lot of rent, but the expenses still continue. I think those are the businesses where they can definitely benefit from EIDL a lot more than PPP. Any thoughts on that, Jackie?
Yeah, I totally agree. I guess you just have to kind of look at the business revenue as a whole. A loss in profits alone is not going to qualify you for this loan. There needs to be substantial economic injury, and the loan needs to be necessary for you to meet your ordinary payables and obligations in the business. So if you fall into that field, why not take both loans? Like Marina said, we don't know what's going to happen in the future, and if you otherwise qualify for this loan, it's a 30-year term, which is much more forgiving than our short PPP term. Even though the interest rate is 3.75, if you look at that over 30 years, that's really not too bad at all. You can always pay it back sooner if you have the ability to do so. But yeah, I would definitely look at your finances and the business's revenue as a whole, and make sure you can make those certifications properly. But if you can, I think it's a great capital loan.
And remember, guys, this loan has been around. It's available for all disasters. So unlike PPP that was brand new and the rules were written as we were talking, this has been around for a long time, and always was available to businesses that suffered, through hurricane and through earthquakes and other disasters. So this was always available. Now, in this particular environment, the rules were relaxed a little bit more, particularly when it came to, I think, the personal guarantee and the collateral. I think they had dropped the limits on, even pulling your credit versus in the past. So there's definitely been relaxed rules, but most of the original loan terms are definitely still there. So SBA, and I'm saying this because if you go on the SBA website, if you look at that EIDL loan, there's a lot more explanation and description on what it is. And you can easily read some of the rules on it, because again, that's been around for so long that some of those things are pretty tight and fairly clear to read. So I think that's definitely a good opportunity. There's a couple of questions that are coming in. Should we take some questions? Jackie, did you want to mention anything else before we get into Q&A?
Yeah, I don't think I have anything else to mention on this. So yeah.
Dennis is asking, will 501c7, not 3, be included in this round? I'm assuming he's asking about the EIDL. I know that some of those entities were eligible, but at the top of my head, I don't have clients like that, so I did not really read into that. Do you remember anything about that, Jackie?
No.
No. Dennis, let me see if I can easily find it for you, and then I can. Maybe if you can shoot me an email, marina@koontzparkin.com, so I have your email address. I will get back to you on that. So it's 501c7. 7, not C3. Definitely C3 is R, but I'm not sure about 7. Mary Ellen, we received an initial $1,000 deposit towards the loan. I'm assuming that was a grant, and then received a notice that we were not eligible for the loan. Should we apply again? Yes, I think you should apply again. I don't see a reason why you wouldn't apply again, because I think that maybe if you were not eligible, maybe it was necessarily you, maybe they were running out of money, but I don't see a reason if you're not in the midst of application process why you wouldn't apply again if you're referring to EIDL loan. Any other thoughts there, Jackie? I don't see a reason not to apply again.
I don't see any reason not to. I guess I'm just curious about when that denial came through, if it really was because the funds were exhausted, or if there was some other reason. I don't know if, I feel like it was sort of a black hole. Whenever people would apply for these EIDL loans, there wasn't a lot of communication. There wasn't a lot of ability to ask questions. So I guess there's nothing off the top of my head. I know there's a restriction against how many loans you can get. You can't get more than one EIDL loan, but like you said, I don't see any reason why you can't apply again for the EIDL. Now, what I would make sure is when you go to apply for EIDL again, just read the instructions carefully, because they may ask you about whether or not you've applied for EIDL in the past, and also make sure you're very clear that you've already received that EIDL grant, so that you're not double dipping in that respect.
Nancy is asking, she's got a PPP question. If my PPP funds were received in April, am I locked into 8 weeks? No, you're not. You can elect to be into 8 weeks, or you can elect to be 24 weeks. And you're not locked into 75 and 25 either, Nancy. You now can go with the new 60-40 split. You're only locked into 24 weeks if you receive the loan after June 5th, which is when the law passed. But if your loan was earlier, you can elect to be 8 or 24, nothing in the middle. So hopefully that answers that. Phyllis is asking, great question, Phyllis. How does all of this relate to realtors and other independent contractors and sole proprietors? Well, Phyllis, PPP is definitely a good opportunity, and so is EIDL. We have covered a couple of times independent contractors and sole proprietors, how they're getting gypped a bit under the PPP rules, in that if you are the only one that's working, whether you're on payroll with your own company paying you, or whether you were just an independent contractor, that how limited your compensation is to determine the amount of the loan and also the amount of forgiveness. And I think if you don't have really any other business related costs that are eligible for PPP, like you don't have real business rent, and you don't have business mortgage interest, and you don't have business utilities, let's say you're working out of your home, which is very typical for a realtor, other than your own compensation or your own net income from self-employment, that is your only eligible PPP cost. So the PPP funds are great for that, because again, there's going to be a chunk that's going to get forgiven. However, all of your other ongoing real estate expenses, that's where you can use the EIDL loan to apply for. So all your advertising and your marketing and all your ongoing relationship and your travel and continuing education, everything that your dues, all of your typical realtor expenses, they're not eligible expenses for PPP, but these are all expenses you still need to incur. I would certainly advise to apply for EIDL. Jackie, do you have any thoughts as to why that wouldn't work?
I think that the EIDL could even potentially be taken to cover the self-employment income of a Schedule C filer, such as a realtor. But it has to be, remember, the permitted uses of funds is still limiting to a certain extent. It has to be payroll costs during business disruptions and substantial slowdowns. So by the time you burn through your PPP loan proceeds, if business is picking back up and you don't have substantial economic injury, you can't take that EIDL loan. I feel like a lot of people are not going to qualify for this EIDL loan, because a lot of people are not still going to be able to certify that there's there's an inability to meet their normal expenses. So I guess if you, for whatever reason, are a Schedule C filer, business is still really slow, and you need to replace your self-employment compensation, yes, an EIDL loan can be used to supplement that. And it can also be used to pay the mortgage payments, the rent, as long as they're business mortgage and business rent payments, and repaying the obligations such as credit cards or whatever, those kinds of obligations, dues, things like that. I do agree that it can be used to cover that, but just keep in mind that threshold that you have to meet in order to even qualify for this loan. Now, something else I would also mention is that the PPP loan is limited in terms of the forgivable payroll costs that a Schedule C filer can enjoy forgiveness for is limited to the 2019 Schedule C amount. I don't know, or at least I don't have any information yet on what payroll costs is deemed to be under EIDL, meaning I don't know if you're capped at 2019 Schedule C amounts, or if you can continue to pay yourself what you've been paying yourself in 2020, which may be significantly higher than what you paid yourself back in 2019. PPP ties your hands in that way. I don't know if EIDL is going to do the same thing. We just don't have that information at this point.
Yeah, EIDL, exactly. They didn't say anything about limiting of the payroll costs. I think I guess the overall intent of the EIDL is probably not to do that, but we've been surprised before, so I wouldn't be surprised. The fact that it did mention in the EIDL rules that you can use it to pay independent contractors, I think that's a good sign, which probably means that any type of compensation that you are now required to pay, you can probably pay. And that's also a good opportunity, Jackie, if you're self-employed and you are limited to your 2019 payroll level, but if you're paying yourself substantially higher this year and you are under economic injury, you can maybe use the EIDL funds to supplement the rest of your compensation. But again, keep in mind, guys, that EIDL is a loan. So what I'm still finding with a lot of people is they're not really interested in a loan. So this is why the whole concept of suffering economic injury and getting this loan is important. If you truly have suffered economic injury from the disaster, then you will take the loan. If you are saying, I don't really need the loan, I'm doing okay, I kind of want to back up, but you really haven't suffered the injury, which is why you don't need the loan, I don't think you're going to get it anyway, because you are going to have to certify that you've suffered economic injury. And I feel like they're going to look at your loss in revenue and other factors that there's probably part of the application. So this is where the gray line is. It's yes, it's open again. I definitely encourage you to apply if you are in need of the funds, because your business is still not doing well. And but just be careful that it is for those that suffer economic disasters.
Right. Well, and it needs to be substantial enough to where you can't otherwise meet your normal obligations. And what I will say is I've heard other practitioners warning clients and guiding them, if you got an EIDL loan, because they're being shoved through, obviously, as quickly as possible, they're not going to crack open your books and look at your current circumstances and make sure that just because you get stamped with the approval of an EIDL loan does not necessarily mean that you qualify to make the certification under oath that there is a substantial economic injury. So what other practitioners I've heard are warning their clients about is, even if you got an EIDL loan, if you don't have the basis to make that certification, you should probably give it back, because you're still making a false certification on a federal loan application, and that comes with consequences. So just consider that as well. Absolutely. Even if you've been approved.
Another good question is about the EIDL grant. Can I still get the EIDL grant? I believe they're all done giving out EIDL grants. I have not heard anything of anybody getting grants. I've heard people getting loans now, but those initial grants that were limited to $1,000 per employee, capped at $10,000 per business, I believe they're all gone. I have not seen anybody in the last couple of weeks, as the loans are approved, get any grants. So I'm not sure, and Jeff is asking that. Jeff, I'm not sure. Now that EIDL is open again, I'm not sure if that will change, but I have not seen any grants come through for that. So let's just stay tuned. We'll keep reading and bring any of those updates to you. Another good questions that I got is from Miguel. Miguel says, if we receive the PPP loan and the EIDL loan is now, was initially denied, but now they're sending it to us, do we need to supply the proof of PPP funds or PPP fund usage? And how will those two? So I think, Miguel, we talked a little bit about how PPP and EIDL will correlate in that if you are using PPP funds for payroll and that amount is going to get forgiven, you cannot also use EIDL. But the idea is who and how it's going to get policed at the SBA level. That's really where my big concern is. So I don't want you to get in a situation where you got both loans and used them both for payroll and then submitted the loan forgiveness application under PPP to say that I have all these qualifying costs, and then you still have, you know, EIDL, which also was used for payroll. So I think that you're better off, if you did get EIDL, is again not to spend it on any payroll costs while you're still in the PPP covered loan period. That I think will be key. Also to mention is the PPP loan forgiveness application, the first version that Jackie and I studied several weeks ago before the change. In the loan application, there was a line item that said, please list the EIDL grant that you received. It wasn't asking to list if you received any other EIDL loan proceeds. So they're asking for the grant so that they can roll that grant into any forgiven portion under PPP, but they were not asking at that version of the application for whether you had received any EIDL loan proceeds. So I feel like once the loan forgiveness application goes to PPP, at some point somebody is going to look at both of them to see and maybe have some follow-up questions there. So I would be, if you are in the position now to have two loans, I would be very, very careful to document the loan, how the loan proceeds are being used when you're inside the PPP loan period. I hope that makes sense. Anything else there, Jackie, that you can think of?
No, I think that makes total sense.
Okay.
Yeah.
Let's see. If you use 100% of your PPP loan for payroll, will it be forgiven or be limited to 75% of funding? Forgiveness application seems to limit it to 75% of funding. Will that now be reduced to 60? No, so you can use 100% of payroll. You just, for payroll, Claudia, you can't use less than 60 in order to get it forgiven.
That's also during the covered period. So it also depends on what you're able to spend those loan proceeds on during the covered period. So even if you spend 100% on payroll, if you only spend half of it during the covered period and the other half outside the covered period, you're going to be limited to the one half of your loan proceeds that were spent during that covered period. So that's also key.
Dimitri is asking, when does the loss of revenue start? I guess for purposes of determining economic disaster and whether you need to
look at your current circumstances when you make application for the EIDL loan. So you can't look back to March 30th or April 30th and where you stood at that point. If you're doing okay now, and if you have the ability to meet your normal payables and obligations, you do not qualify for this loan. If you don't, then you may qualify for the loan.
Claudia has a follow-up question on the 75. Claudia, if you want to shoot us an email, I can walk you through a little bit more. But in the line of the application, it's not going to limit it to 75% of the proceeds. It's just testing to make sure that you didn't use less than 75 on payroll.
Now, Marina, I feel like we are still waiting on the updated loan forgiveness application to come out. So I don't know if it's really worthwhile for anyone to torture themselves by going through the old application, unless you're just a sadist.
Yes, we have tortured ourselves over the application. I have not even. Do you know if they're updated anything, Jackie, on the loan forgiveness application or not? Not yet.
They released an updated borrower application for the PPP loan, but I don't believe that they've actually released the updated forgiveness application. I think that's going to be a huge undertaking. The Treasury Department was in a press conference, they were trying to say that they're going to be revising it to allow borrowers to be able to complete the loan forgiveness application in 15 minutes, which I think is hilarious. So we'll see if they're successful in that. I don't see how they could possibly do that, but we'll see. But I guess my point is, if you can hold off on playing with that application until the updated version comes out, I would recommend doing so for your sanity.
Yes, absolutely. And, you know, to remind you guys on the deadlines, the PPP loan, there's still funds in PPP loan, and the application, I think that is only, the deadline goes through June 30th that you can apply. I don't believe there has been any extension on that deadline, right, Jackie? So
Nope.
you've got till June 30th if you still want the PPP loan to apply, and there's money. EIDL loan, the application deadline is December 31st. But again, they ran out of money so quickly, and now we're not sure how much is funded and how it's going now. So I feel like if you do have all the right factors, you have suffered, your business is still struggling, and you need either of the loans, definitely apply as soon as possible. The banks are definitely a lot more equipped to handle the application. There's a lot of local banks that are, you know, that have customers that were not their clients and process them really quickly. So I am very grateful to, you know, I'm lucky to be able to say this, but a lot of our clients are doing well and are on their way to recovery, and so I'm really proud of everybody. It's absolutely fantastic. So I'm glad that we, at least with imparting our knowledge, we're able to assist, and we'll definitely be there when this forgiveness thing is going to hit us. But there's still a lot of businesses out there that are not fully, and I think the hospitality industry is particularly the one that is still very much struggling. They're reopened partially, some of them maybe, none of them. So it definitely utilizing PPP loan and definitely utilizing the EIDL loan, I think it's going to be great for that industry.
Right.
Yeah. That's all I really have for today. I think we've answered a lot of the questions. And if you guys have any follow-up questions, definitely, please feel free to send us an email. I am at marina@koontzparkin.com. You can send any emails to me, and I will get Jackie and Joanne involved in helping answer. But we try to cover all of these topics on and off as the updates come, but there's still a lot of confusion and still a lot of questions out there. So we're definitely happy to assist you guys. We will be back on Thursday with some non-PPP topic, which will be very interesting. And you will learn a little bit more about that later when we'll send out an update tomorrow. But I'm very excited about that. We're going to have a guest speaker. And I think that's it for me.
Yep.
Have a great day, guys. Thank you so much for logging in and listening to us talk about this. We will see you guys later.
Have a good week.